The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, the 6th, INDU, the 6th of March. We're well into March, and this has been a fabulous couple of days. This is important because within the context of the patterns that I look at, I don't want to go through the whole thing, just enumerate the whole thing on the Chapman Wave Roman candle that allowed us to get into that long position. That was, I put the date in because I do so many of these different things that sometimes I forget to put the date in. That was on the 1st. Let's see, that was the 1st. And what says the 1st here? First is right there on Wednesday. Yeah, that's it. Before the open on Wednesday. We did go long, aggressively long. The Dow, 3 times long. I know people talk about the Dow and say it's only 30 stocks and it's price weighted, blah, blah, blah. I just say, you know what? It's a trading vehicle. It does everything that I've made a call on the Dow maybe for 30, 40, I don't know how many years, a daily call. I know it quite well. I do exactly the same thing with the S&P, the Qs, and everything else, but the Dow is the one that I really just have a laser focus on. And this is, I tell you what I said to subscribers this morning, that if there is, in fact, a strong move to the upside today, and not the pullback, the normal pullback you get from the last hour's trading like you saw on Friday, this says that this could be a takeoff phase. Now, I know this is just beyond comprehension to those perma bears, and I'm not a perma bear or perma bull. I follow the market, and I just say this is what I'm anticipating. And I'm thinking that if we get the right technical indications, and I'm still waiting for the MACD to cross positive, it's still negative in the daily, in the Dow, the stochastic still horrible. In fact, it was at 16% on Friday after that fabulous 3 days. So all I can say is that it needs a lot of work, but the 9 is the one that I'm watching, and that's going to take even more. You're going to have to get over this blue horizontal line that was the midpoint of the long, narrow rectangle of the Dow, 33,600, that when it broke down, I said, oh, here's a problem. But now on the upside, if it starts to break to the upside, when you look at this pattern that I'm looking at on the middle chart, the middle chart is the weekly Dow, there's a pattern that I look at that says, in the lowercase h, when you come down sharp, you remember I'm always looking at 3 patterns, straight up, straight down, cup formation, arch formation. Within that, you can get large rectangles, narrow rectangles, all sorts of things. But most importantly, when you come down, how you test that left side low is so important. If you test it and take it out, but close above it, that means one thing. It means you can rally, probably not going to rally above the arch high. Usually it fails at a peak, A or a B. If it closes underneath, it says there's a good chance you aren't even going to get up to that level. And this is a new buy signal that goes to a buy mode. If, in fact, you're looking at the rectangle that's formed here, and there is a good test of the left side line, meaning it doesn't break down, and then it starts to move up, well, that says if there is a close above the arch high, you can go all the way back to that previous high. Well, here it is. There's a straight down move. There's a rather large H pattern, arch formation, looks like a lowercase h. It didn't close underneath the left side low, although at 32,500 it went below it. It closed nicely above it on a weekly basis. And that says there could be a rally up into the 34,000 area. Wow, we're at 33,516. That is a long way to go. So I like to go step by step. And all I can say is that in the weekly chart, the 9-period moving average has held above the 14 all the way through. You want to know how strong that is? Look at this. Here is your E-mini. And look what happened here. you got a long, narrow rectangle formation. And a narrow rectangle formation, it did it twice. It did it from at 3:10 on Friday. It kept going sideways, and then there was a sudden pop up just after the close, later in the evening. Oh, wait, that couldn't be. That would be going to 223. Oh, that was Sunday night. Sorry, that was Sunday night. And so it went above it, and then it continued holding. But wait a minute. This is the 10-minute chart, and if you're looking at the 10-minute chart, I use something that I call the phantom peak right here, and I even typed it in. I said phantom peak. So within this context, even though I got a signal that said there's two parallel highs here, and use a phantom peak at that D, it wasn't appropriate to get out of the position, other than maybe if you had a couple of positions, take one off. But because the 9 period was so strong, now look what's happened. I can move this D over there, because in the Chapman methodology, we're always looking for at least 4 higher peaks before something else can happen. And this red heads up, peak B, goes back to being a blue. And here we are. And look how long this has gone on for now, since 8:10 this morning. And now we're at 10, let's call it 10:10. It's 10:12. But for an hour, it's kept you in the trade because the 9 was so strongly above the 14. So when I say 9 is above the 14 in the weekly chart, that's the reason why I've been wanting to buy and not short in all this period, because it's just telling me that there is buying going on. It's as simple as that. Not making it complicated. Buying going on. That could change because it got very close to the 9 period, got very close to turning down below the 14 period, but it didn't. And that to me is really important. So within that context, what we're looking at, the Dow once again has become a bit of a leader. It was a leader for a long time, and then it had that whole sideways move where the other indices, you remember the Goldman Sachs and Travelers, the two Dow stocks that just clobbered the market way back in mid-January. Oops, it went from that peak D sharply down. Then it tried again, it went to peak A, B, C, again another peak D, slightly below the high that was made at 34,342. And then it tumbled down to the 32,500 level. So this is important because if the MACD does cross positive, it says, you've raised your base of support, and now you can make a V-shaped recovery to have a third attempt at a peak, whatever it is, over at the 34,300 area. Okay. On the other side of the coin is that you're looking at this bifurcation where the Dow is leading, but now you've got the S&P doing pretty nicely. Yeah, the S&P, actually the chart pattern of the S&P is a little bit better in the daily chart than the Dow, and it's running at 21 points to 4,067. That's really nice. It's about to, I'll show you another Chapman wave technique we can use right here. There's a pattern that I call the falling axe. If I can just get that, maybe tick. There we go. Well, how do I do this again? Oh, there it is. I'll show you right here. Oh, right coming up. Right here. See this pattern? Where you go straight up, you go to a D, E, F, or a G, and then you start to make lower highs and much lower lows. Then it forms this base of support and starts to rally. Doesn't that look exactly like this here, the falling axe pattern? I'll be back. The Dow's up 125, the S&P's up 22. Basil, Chapman, Tiger, Technicians are.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So I just wanted to show you that in the S&P, there's a technique that I use called the Chapman Wave Insight Track Repellent Propellant Zone. A lot of words. All it is, two trend lines. You take the outer one, usually in this falling axis, it doesn't have to be in the falling X pattern. That's the expanding cone. You just draw them where you're joining the outer lines of the bars to make a trend line. And then I always add a little like 3/16 or just a tiny little narrow channel. And I make one red and one green. And if it's on the way up, that red is where, between the red and the green is where the price is almost always going to stall unless it can power right through. So it's a repellent zone. And then it becomes repellent, then it becomes a propellant. And we saw that in the S&P weekly that I've been talking about for not months, but months and months and months. I said, look at that. Finally, we're out of it. Now is this going to become a propellant zone? And that's really important. Well, it turns out we're talking about a repellent zone in the daily because it's got to break through. It's got to start. Can't just go there. It's got to start trading above 40.84. Probably it has to go into the 40.100 to say, okay, I'm done with that in the daily chart just for the moment. And that's really going to help the weekly chart. And you can see that the weekly chart has come and tested it. So that's really important. So what am I talking about? I'm talking about the expanding cone formation, declining, expanding cone. I call it the falling axe because it looks like a falling axe. Did I show it? Yes, I did. And you want to break above it. And if you can break above it, there's a chance you can do a 1-to-1 parallel extension. It's a Chapman Wave 1-to-1 parallel extension. That's different to the A to B equals C to D because in this case, it's required that you keep the same, it's almost the same number of bars, but it's absolutely the same degree of angle to the upside. So you can stall a little bit, but once you start moving up, you start to look at that. And then what you look at is on the left side, what's the next peak on the upside? In this case, 41.59 from the 14th of Feb. And then you can go all the way to the high that was made at 41.95.44. And that was the 2nd of February. Let's just do quickly the QQQ. It's the same thing. It's right in the zone right now. Even as we're speaking, it's gone above it. And now comes the big test. Is it able to go from 302.62 to the 303.75, somewhere in that range? That'll be very good action on a closing basis. Can't just bounce there. And the weekly chart, you can see the falling axe. Sorry, it's both a falling axe and an inside track repellent zone. That's become a good propellant zone. Not only that, you've got your green 9-period moving average and 14-period moving average as support. IWM, I'm going to just do this quickly because a lot of questions have come in. Peak A, this is a peak B. In the IWM, coming off the 200-period exponential moving average above the falling axe resistance. This is a good sign, although it's down 44 cents at 191.06, just digesting. So maybe it's not the leader, it's, as the small caps sometimes do in the beginning of a year. So we'll just be watching this closely. I want to go to gold and silver because I did not do silver. Gold is off the high, but it's still up 2.4 at 1857. That's the intraday high. And silver was acting so terribly last week and couldn't do very much. Now it's okay. It's just okay. That's all it is. It's not great. It's up 0.01 at 21.25. Now, a question came in. Could I look at, where did it go? Blink. BLNK. I always look at Blink because it just sounded like it was just the perfect vehicle. Blink charging company, and boy, did it charge. It went from under 1 screaming to the 60s in 2021 January, and then since then it's just made lower highs and lower lows, on and on and on and on. And the most recent one was this low on three days ago at $8.38 on the 2nd of March. I think I said 823, right? 23 on the 3223. Okay, so what it's doing now is quite nice, but it's just quite nice. So here's the question. On a fundamental basis, I haven't done fundamental work on Blink, but I have done enough studying it every time it's ready to say, is this ready? Is this ready? To say, it's never ready. It just, something's not right. It just cannot get the traction. Blink, charging, I mean, everyone's talking about charging stations. Tesla can't do it alone. It's going to have other charging stations for everything else but a Tesla. And Tesla will, of course, have everything else at some point, plus a Tesla. I don't know how they're going to divvy it up. It's going to be amazing how he's able to monetize that part of it. Anyway, what I am looking at is I like the action of Blink as a starter, just as a starter with the potential to rally at least for a week. It hasn't done that since it ran up to that February, about the 2nd of high of about $14, $15, and then it tumbled down to the 8s. So yes, I think so. So if you're asking, is this the starter position? I'd say it's the starter of the starter. Right here at 9:54, I'd say, get your foot in the door, but don't get carried away. I would rather add on strength. And let me tell you, it has to close above the high that was made, the inverted Chapman wave Roman candle failure pattern from the from the 1st of March at 10:55. Now, what happens is, it's 2 days, it's past 2 days. So this is going to work as a peripheral thing. I'm just saying there's a chance that if at any point Blink, BLNK, Blink charging, and trade for, I'm going to make it a whole 90 minutes, can trade above $10.04. Not 10, but $10.04. I heard this sound. I thought, oh, computer about to blow up. No, it was outside. That would be the start of something that says there's a chance it could reach that high and try to take it out. And that's where I would add. So just a starter position and then another starter position. So you're not getting carried away. Rather let it build energy. Build energy for about a week or two. And then I'd add to it. It needs to prove itself. It did it before. It did it when it made the low back on the 27th or 8th. What was that? The 28th of December at 985. And then it went to peak A, B, C, D, spiked up to E, made an arch formation, came all the way back down. And now it tells me that it's capable of doing that, but it might have used all that energy then, and now it doesn't have enough. But so I'd only get the starter position, and I would add to that starter position, as I say, at just $10.04 if it's holding for about, I'd say I needed time. I needed for about 90 minutes. then I'd say add your second position, but don't get carried away. You can add to it over a period of time. Next question was, and the other thing is, if at any point today's low of 912 gets taken out, just step aside. All right, next question is Tesla. So I had said for a long time, Musk has got his focus in the wrong area. This is for over a year. I think there's a big problem, and my target was to go below this low right here of March of 2021, which is 179. Well, it did a 1-to-1 to the downside from 414.50 in November of 2021, and then it had a good bounce, not a 50% bounce, but a pretty good bounce, and then it did another 1-to-1 to the downside. And then I said, I think Tesla is now ready to have a pretty decent oversold bounce. I did not expect it to go from 101 to a high of to the 203 moving average in a month or so to the 213 level. Now it's digesting those gains. It's worth talking about because, Tesla always come up with a pleasant surprise. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charted software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hello, Basil Chapman here, and we're looking at, let me just check to see, that was that plan, yeah. Okay, so let me just go through this again. Tesla, trading right now, TSLA is the symbol, down $1.61 at 196.16. It's stuck in the rectangle formation. So let me just talk to you just briefly about the rectangle formation. In the rectangle formation right here, oops, click. Okay, I have to do that, right? Okay, now I can do this. Okay. Rectangle formation there. So the rectangle is a long, narrow rectangle formation. Remember, I showed you that in the E-mini. Let's look at this. And then there's a large rectangle. So this started off as a large rectangle. Now it's becoming a narrow rectangle, but it's kind of a mix. So it's a hybrid, appropriate for the moment. And what we're looking at is it's stalling after a fabulous move. But where is it stalling? It's stalling. Tesla's stalling at the 200-period exponential moving average. Well, the 200-period moving average at a different level, way back in the 260 area. Look at this, 280 area. Back in August, all the way from July, late July, into the breakdown just before August started to collapse. So we're talking about October, it was September. So you're talking about July, so it's August, September, on a daily basis. Tesla bounced over the 200-period moving average, acting as a support level, went under it, went back over it, just couldn't hold it, and had a double top from 314.67 back around about the 15th of August to about the 19th or 20th of September. It went to 318.80. I told you how many times throughout the last year have we seen so many stocks. I'm going to go to the TLT in a moment to show you what happened at the 99 level, how double bottoms and double tops, even if they're days, weeks, months, sometimes years apart, have been acting as incredible support and resistance levels. So 313 down to 101, I would say that was a resistance level down 60-something percent. And now we've got 101, it doubles to the 100, to the 213 level, to where the 200-period moving average. So history for me says that the 200-period moving average, even though it's at a different level entirely, it's just trying to flatten out, but basically it's still got a downhill slope, says that that's going to be a strong resistance. The fact that it's holding here for a little while is good, but I'm also looking at this and saying, okay, be careful that this is not distribution. Distribution would imply that on a daily basis, it's one thing, but on a weekly basis, very strong peak A with a MACD good stochastic at 84%, that's a good sign. But at any point, if there is a close below 188, now that sounds like 108, it's almost 20 points. What are you doing? Sorry, 10 points. It's just been going sideways. Yeah, it could happen. So if Tesla drops 10 points from here, because remember I said this whole thing was just in my opinion, because I mean, what do I know? I have to speculate based on my own empirical knowledge of what I've read about Tesla, what I've read about Musk, what I've seen with Musk. And I said that he had lost his focus with Twitter. I think, and right here going to that January low, December, January low, that's where I said, I think that there's enough impetus to say that Tesla's oversold, there should be a bounce. This is way more than a bounce. And this says to me that there's a chance that the powers that be within the whole Musk, the board of directors, whatever it is that goes with the board of directors of Tesla and the board of directors of Twitter, whatever it is, I think there's a lot more responsibility being taken in the area of Twitter from Musk. But I still think that no CEO is able to take such diverse SpaceX. You've got, what is it? It wasn't SpaceX. You've got Tesla and Twitter. These are, I mean, maybe at some point they'll all be the same thing because they'll be all floating in space, Twitter words and Twitter whatever. But at this particular point, it's still a challenge. So I think that there is a bit of a limit to the upside, but at the same time, until I see a break of, I'm going to make it 180. Until I see a break of 180, I think that Tesla's digesting these huge gains, but I think that the gains are going to dissipate at some point fairly soon, unless there's a move above 237 to 241 in March. If that happens, that just says, you know what? We might be done with Tesla's consolidation, and it's now becoming a leader again. But until that happens, I'm saying digestive phase, I don't know if I'd short it, and I don't know if I'd buy it. At this particular point, I'd rather use options to trade it, and I'd only keep them as trades for now. But that's what I'm thinking. Okay, I hope that helps you. The next question came in was where did I see it? Oh, was it over the weekend? Yeah, it was a good question over the weekend. I can't remember where I put it. It had to do with. Well, I won't be able to find it. Maybe in the break I'll find it. It was a good question, but it had to do with. Let me think about what it was. Oh, that's right. It had to do with the fundamentals and not looking at profits or the balance sheet of companies. And my answer to that was, in my mind, was I try when I read what I read, I try to put the two together when I see it, but mostly I'm looking at the technicals. So I hope that's that kind of. Just remember, you can make money in the market as long as you're doing your own homework and you use your own techniques and you consistently stick with your technique. Don't keep trying to emulate other people, or you can use that as a benchmark to improve your technique or add something to your technique. That's why I always say when I'm teaching my techniques, I always say, remember, it's got to become part of your technique. You're not looking at me as if to say, hey, how did I do? It's going to tell you how you did because you're using it in conjunction with your own work. I don't know your own work. Could be even better than mine. Maybe you've added something that's even more additive. So that's all I'm saying. Okay, within that context, I need to look at this particular point at the SMHs. Question came in over the weekend. Are the SMHs lagging or leading? You always talk about that. Are they leading or lagging? And my answer is they're doing both. They've led the whole January rally, and then they stalled, boom, dead, right around February the 2nd or so to peak D. The SMHs stalled, but they're not breaking down. They're making lower lows and lower highs up until this minute that we're talking, because now you're getting some sign where the 9-period moving average has just crossed over the 14-period moving average, and there's this Chapman falling axe formation, and that says to me that this was already, last week I said was an extremely important week. This is the follow-through week. This is the week that says, hey, whatever you saw last week was a one-off, or actually that's the real thing. And that would be if the SMHs by maybe Wednesday, they can have a bit of a digestive day or two, but let's say by Thursday. If Thursday is, it doesn't have to close there, just a pop above 253.77, the high of the 14th, nicely away from the inside track repellent zone, says to me, you know what? That weekly chart, which is holding so nicely, is still active, and it's just telling you that this market should find new legs, or continue the move that's just been really spectacular over the last 3 sessions, and that should continue. But to continue, I do believe we want the SMHs to participate. I'll be back in a moment. Got a couple other questions that we'll go to. Just the monthly looks like a buy the D point bullish. In a way, I have to agree with that, yes.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So these are things are popping up all over the show. These micro biotechs. Here's one, Ardelyx Inc. ARDX is a symbol, trading at up 31 cents at 413, up 8%. Look at this. The monthly chart is starting to get way into this horrible candle. Can you imagine biotechs? Many often have these massive turns. Look, this thing is trading at $8.23. July of 2021, and it comes around the bend, whoops, comes down to 151, closes at 174. Unbelievable. Well, it's trying to get back in there, and I love the way the weekly is just steadfastly making higher highs and higher lows. There was a gap up on Friday. Now it's follow through to the upside. That's amazing. So there are a lot of these stocks. I've just got this. I haven't really done any work. I just checked to see what they do. Discovery through commercialization, driven to advanced targeted therapies where significant medical needs persist. Of course, that's just biotech in general, right? What does DUPIT say? Let's see. Advanced patient care with targeted first-in-class novel mechanism therapies that address significant unmet medical needs. I think that's biotech. I don't know what they're saying there. Anyway, look at that spectacular move. Just 3 days ago, this is on Thursday, toodle, it's kind of failing. It's down at the $2.80 level. Bam, 409, 2 sessions later. So there are a lot like this. So I just thought I'd show you what's happening. Remember, I mentioned CHS the other day. I said, we were talking about Costco, and I said, they're all over the show, the whole retail area. But look, here's a stock that showed up on my screamer list. This is Chico's Fashions Apparel, women's apparel. Look at this peak, C1, C2, C3. Then it goes to a D in the monthly chart over a 2-year period. And now it's starting to come back again. But do you buy it here at $6.33 when, once again, Monday, a week ago, it was tootling along at $8.50. It was tootling along at $5. And now it's at $6.33. So it's tough to do. But the fact that we're getting so many of these, the fact that you're looking at areas that were kind of dormant for a while, like Macy's and Chico's, and all of a sudden they have these big pop-ups, it's a sign that something's happening. So in the Tiger YouTube, a question came in, Basil, copper long-term chart. Isn't copper screaming to us that the economy is fine? I always talk about, for decades, Wall Street has talked about Dr. Copper. Dr. Copper only because it envelops the entire spectrum of economies wherever you can see it's strong. And therefore, it's a very important ingredient, both physically and psychologically, in looking at markets. Well, if you're looking at the HG contract, copper continuous contract, it had a high up at the 5 level, a low down the 3 I think it was 320 or something. Let me just give you the exact figure. Yeah, 313. And then that was in July of last year. And now it's had a pretty decent rally. And if you look at the weekly chart, yes, this is the wide rectangle, the deep rectangle that can go to a lopsided gravy cup, making higher highs, higher lows, going to just under, right on or just above the previous high. But it got close. It didn't quite get there, but it's still acting really well, walking the 14 and 9 period moving averages in the weekly. So the answer is, I'm impressed with copper's action. I'm impressed with the HGX. This is the Philadelphia Housing Index. Look at this. It goes from a high at a peak. Was that a peak? That was 536 back in May of 2021. Has a double top almost at about the same level. And then comes a U-shaped pattern. The right side was much weaker and comes tumbling down. And it goes to the 320. Did it go to 320? Oh, I typed it into my other chart. Yeah, 340. Let's just say around about 340. Now it went low. It went to 320 back in June, July of 2022. And then it screams up to 480. And this is with all the bad news about yields and inflation and everything. I'm impressed with that. So all I can say is, yes, the answer is, I think copper is telling us that things are not as bad. I'm not saying they're great. I'm saying they are not as bad as often is made out. And at the same time, you've got to respect that it hasn't broken to new highs, but it's acting very well. But the other thing is that within the context of patterns, influences in the general market, etc., between copper, wood, this is the iShares Global Forestry ETF, which has come back but not quite as strong. So it says copper is doing okay internationally. The iShares Timber Forestry ETF has stalled, but the HGX has held extremely well, the Philadelphia Housing Index, which is a good sign. But I'm not using those as benchmarks. I'm talking about the rotation through the different sectors, how the steel sector, this is deep cyclicals, is doing well today. They're pulling back a little bit. This is all, to me, impressive action and saying this is this is the Wall Street word I often use, the bifurcation, which just means split personality, really. Okay, so I am impressed with copper. If you look at FCX, look at this. In the monthly chart, it's had a peak C. It pulled back very sharply from the 50s down to got cut in half to 25, and now it's trading at 43. A nice comeback, a little bit of work. It needs now to go back into the 47 area. But yeah, this is good action. SCCO, which is the Southern Copper, is even better. It's almost at, look at this, it's above the resistance level. This is the inside track repellent zone right there. Right there. Look, it's above it. There's the falling axe formation. Now it's making a cup pattern, and that cup pattern says, hey, don't exclude me when you're talking about copper, because I'm leading, I'm doing well. Okay, so within that context, yes, I am impressed, and that's another reason why that we only have long positions, no short. I have a preparation of a short position, haven't taken it yet, but it's just to tell me, be ready, because this market, anything can still happen in this particular market. So a question came in about Rivian. Rivian. Yeah, I don't think you can compare these things. I think you have to put them into separate categories. This is really a novice in the field. It's just a baby. It's just begun its lifespan. So, this is Tesla is not just a mature company. It's been through the rigors. It's been through a lot. So they have the wherewithal to withstand a lot of battering. And that's really important. And you know what? I see so many Teslas. I was in the one the other day. I see so many Teslas on the road that they are, I wouldn't say ubiquitous, but they are becoming so familiar that I think, and as long as Musk can keep off the news politically, I don't know how easy it is for him to do that, I think people will still, they love their Teslas. I mean, I've not yet met a person who has a Tesla who says anything bad. There was someone who said they knew someone who was very disappointed. But mostly I hear very positive. People are willing to put up with certain things that are not right because they love the drivability of the car, the way it handles, etc. I'll be back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, just on a short-term basis, the 10-minute chart is in leg E, still way above the 14, the 9 and 14 is way above this is excellent action with the 19 stochastic at 83 in the 10-minute chart. The 1-minute chart is suggesting that we could pull back. And I'll just give you some parameters that I'd be looking at for the day. If there is a trade for 15 or to 20 minutes above 40.85, I think it'll just bring in brand new buyers. I mean, people will say, oh, I have to get in. If there is a slide, it's at 40.76 on the E-mini right now. If there is a 20-minute period where the S&P, the E-mini futures, start to trade under, it's at 40.77, start to trade under 40.65, I'd say 40.63, about a 15-minute period. I would say perhaps now we've got our 1-to-1. This is where you can have 2 clicks where if you were short now and you had a 3-point or a 4-point stop, you could hold that for quite a while. But at this particular point, I still see too much strength. I would not be thinking of the 2-click pattern at this particular point. because it is still trading really nicely. So that's it. So I'm going to also add, don't forget, Larry Pesavento has his workshop coming up Wednesday. I probably don't have to tell you, those who are really interested are always, the moment Larry announces something, a lot of people show up, and they know that he has a fabulous trading session every time he has a trading webinar. So sign up, look at the front page of TFNN. It should be really worthwhile. I know that if I had them as much time as I'm going to be able to have free, that's when I'm going to be in there watching, because I always learn something. It's just a tremendous series of pre-planning and action that goes with the plan. I love it. So with that said, as I say, today there's a chance we've run out of some of the upside action. Watch to see if there's a slide on a very short-term basis. We'll start that slide and go down below 40.72, 48.80. Have a wonderful day. I'll be back tomorrow. Check out my opening call. We've got some real nice trades.